Hello guys, welcome back to another video, and today we're going to be talking about how to trade the 20 period moving average. There's a strategy behind it and I'm going to teach you it right now. So this is my 20 EMA line, the blue line going straight through all this price action. As you can see, set up over here, it's all default settings, it's blue, keep an eye on it, okay? So things to note in this market is we've had a nice downswing of price previously. And you can see along that way down, price was respecting that 20 period moving average, okay? And now we've had a momentum swing, so the bulls have taken over. This is now a bullish market. However, upon that takeover, upon the as price crosses the other side of our moving average, you can see price has rested and bounced off our moving average once, twice, three times, and now we've had a fourth, okay? So now we're interested, okay? We know that price is respecting our moving average and we want to maybe get into a trade and go long, okay? So I've used the replay tool to replay price back to this fourth rejection, and now we've seen it bounce off. Now we're interested, okay? It's going to replay price. Okay. So now we've had an entry into our zone of interest. So I've marked out a zone of where price bounced off and our moving average, okay? So we don't take a trade on the daily time frame. You want to try and snipe an entry on the 4 hourly, all right? So I'm going to get onto the 4 hourly here. Just going to scroll back a little bit to where our zone is, okay? So this is our zone. Quite clearly see we've had a nice break, retest, break, retest, all right? So, you know, you could have entered here, all right? That was our fourth bounce off. You could have entered off the third bounce as well, prior to this, but I've just noticed this in the future. I didn't take any of these trades, I didn't see it, but you could have well entered off of the third bounce off, the fourth bounce off, but this one luckily had a fifth for me to go through with you today. So this would be our entry point, and our stop would be just below this level, okay, or just below this wick here, all right? That's our stop. And using the 20 period moving average, you can see we've now bagged, so that's our entry point. Look at that, yeah? If your take profit was, I don't know, up here, fair play, that's a lot of pips difference, all right? If I was in that trade, my take profit would have been maybe at this resistance level and see how it reacts to that. Obviously, we saw a breakthrough, so I'd maybe look for a prior level of structure. If I can find one. Give me a sec. Maybe this area here would have been my next area to see what price did, and as you can see, it broke through. And basically, I'd follow that trade up until eventually we did see a pullback and, you know, a swing down. Probably at the break of the 20 period moving average right here is probably where I would have exited the trade. All right, because breaking it, it's not following it or respecting it anymore, just like trend lines. So we want to think to get out. But the difference between our entry point and our exit point is 396 pips. Yeah, look at that. Wow. Just by using the 20 period moving average. Easy as that, guys. Relatively short video today. I just wanted to show you that strategy. If you've got any questions about it, jot a comment down below or email me at andrew.scott96@gmail.com. If you want to see more examples of this 20 period moving average, let me know. I'll be more than happy to set that up for you guys. But I hope you enjoyed. Go back test this, very useful, and I'll see you guys in the next video.